Hey guys, it's Coach Simon with ToughTrader.com and Trade and Perform Coaching. Wanted to cover a topic that I've spoke to a couple of traders here about recently about why they are struggling with their trading now when really they have not been struggling very much in the last couple of really months and years. Why all of a sudden the losses are starting to add up and the struggles are starting to get very, very difficult. And I think I have an answer for that. So the first question to ask is, well, what was the nature of the environment? So I'm going to cover that tonight. Instead of doing the traditional zone reviews, I'll cover that right at the end. But the first question is, what's the nature of the environment and what's changed in that environment that's causing things to be different or look different? And we can answer that question. Not such a difficulty. So number one, if you'll look, this was pretty typical. This is back in December 15th. We'd open up, we'd gap up, we'd have a little dip in the morning, and then we would grind up all day long. Didn't really matter what the size of the dip was, whether it was 2 points, 3 points, or 5 points. As long as you just had the ability to sustain the rotations down, you were generally rewarded with a push back up. Not only that, but once we started heading in one particular direction, we tended to continue in that particular direction. And again, you'll see this day after day, early push down. Even if it was a little choppy, we would tend to resolve to the upside. We did have the occasional trend day down, right? But even that wasn't so hard because once we started down, once we got our first major rotation back to the upside, we would continue back to the upside, right? There wasn't any of this. So even here where, okay, yes, you got pushed down early, but if you could establish position here and just hold and buy the dip early, you got rewarded because we would push back up. And that was the story all the way through. Here we can see that this was in January. Again, if you bought early in the day, you were repeatedly and consistently rewarded. You did not have to deal with very volatile markets, right? Once the market got to the high, the worst case scenario is you got a little dip here, but we generally resolve back up. And you can see that over and over again in the price action. So let's kind of roll it to what we're dealing with now. Okay, so this is today's price action. Excuse me, not quite there. This is today's price action, and I'm going to pull this in a little bit so we can see day over day. And what you're seeing is, so the trend days down, that's nothing new. We had trend days down before, but if you'll look as we're going through, where you think, I bought the dip, I'm safe. Well, the rotations down have become significant to the downside, right? It's okay when you're holding a 3 or 4 point rotation down, but a 15 or 20 point rotation down becomes really hard to hold. If you were used to buying near the highs and being saved on a small rotation up, you're now getting smoked. Today, you think, we've reversed and we're back to highs, we're going to break out. They take you all the way back down towards the lows at the end of the day, right? And if you bought the early dip thinking, I've got the push back to the upside, instead of an open drive lower, they keep smashing you with pushes down, and then the rotation comes back up. So you've had to have gotten in the last couple of weeks and months much more clever. What most traders over the last couple of years have gotten used to is this price action right here. And instead what they're getting is a ton, even on balance days, of covering the entire range. Again, I'm going to show you where you think, I've got the turn, there's no way we're going to push to a new low, and then in the middle of the day we push to a new low. And this is the exact price action that's killing a lot of traders that don't have experience. Now, I'm going to qualify that. If you traded, right, if you traded prior to 2009, this looks pretty normal. This is the kind of price action we'd have. So what is the market doing? Well, what the market is doing is, first of all, the tight grip on volatility has gone away, right? That's what was permitting the lack of counter rotation. Everyone was sure the market was going higher, and that would generate price action that looked much like what we had in February, where every dip was buyable. The rotation size was narrow, modest, and manageable, right? And so the way you fix it, what's the cure for that? So number one, there's a couple of cures. First of all, pay attention to the rotation size. And I haven't talked a lot about this because it's really become kind of a moot point until recently. But if you look, We open today, and when I coach one-on-one coaching, it's one of the first things I cover. We open today, and this is NQ. Let's go look at ES real quick because it's actually more of a staple of what people look for. Let's go back to ES, shift at ES. Oh, wrong computer. Here we go, shift at ES. .D. So what are the things that we look for? Well, number one, let's just break down today, and we'll go look at yesterday real quick to get some clues. So even if you didn't know what particular levels you were looking for, right? Number one, if you look and you measure this, so this is 2782.50, and if I subtract 10 from that, I'll come up with 2772.50, right? And so while that does not get me exactly the low, you'll notice that I get a response off that 10-point rotation. Now watch what happens when I ladder all the way down. My next 10 down puts me at 62.50. Notice that miraculously I get a response the next 10 down. What happens on the next 10? Again, you have to ladder. You have to learn how to do this properly. It's not necessarily easy, right? And it's not magical. There's no, oh, Simon's discovered. It's not like a Fibonacci number. But the market on ES tends to respond at 10. So if I take this 60, that was 62.50. Let's go down to 52.50, which would put me right here. Oh, I didn't get that. Here we go, 52.50. There we go. Notice magically, every 10 down, it worked perfectly today. I got to tell you right now, this does not work all the time, okay? And you'll get clipped quite a bit doing this. You've got to know where your actual location is in this area. It just happened. So I used today's example, just happened to work perfectly, right? But what you'll notice is, look, every 10 points, you're getting a response back up. Now, is it the low? Well, obviously not, because we continue to break. But does it give you reasonable area to go look and go, what's in this area for me to find a location? If you practice this methodology and every 10 points you look for a trade location today, you had a pretty hard time from the long side having a bad day. Let's flip it around the other way. I want to get short, right? So let's say I have a desire. I think the market's going to 0, right? Well, if I look from here and I start looking for pushes back up, right? So number one, let's look off the low. 27.50 and I go, I know we're going lower. I just can't. My house is on fire. I've got to find a way to get short. Well, if all I do is come up and lay up at 27.60, notice how miraculously I find location, right? Again, off the low here, 27.50. We don't quite get to 27.70, and you can be upset about that. There's no big deal. The point is the 10-point stretch keeps me from getting run over at each variable, so that I have an approximation of where I want to enter my trades. Now, if you're more skilled, you can go, hey, these trades, this trade location didn't go up 10 points. That's all true. But if you have a greater skill set, right, you answer your own question, because then you don't need the 10-point rotations, because you have other things and other clues you can work off of to find locations. So this is for people who are newer to trading and need help finding locations. So then the true test to find out if that works is you go and you look at other markets to see how that worked out. So again, for those who join my videos and expect like, hey, I woke up at 6:30 in the morning and by 10:30 I made $20,000 and I spent the rest of the day on the golf course, these are not my videos. And speaking of which, before I keep moving forward, let me pop this up there real quick. Past performance is not indicative of future results. There is risk to trading futures. You should be more worried about the money you can lose instead of the money you're going to make, right? It takes time. This is a work in becoming good at what you do. And the harder you work, the more you tend to make. That's not the same as the more you trade, the more you tend to make. Please have a risk management plan. This is for educational purposes only, and you can read the rest of the legal notice if you'd like. So let's go and see how that worked out yesterday on a trend day down, right? So you go, Simon, it probably didn't work, right? So let's just call this 2807 and ladder down. 2807 brings up 97. So notice magically, if you just took it for taking it, you took 10 points. You don't have location here, right? Come down to 87. Notice that 87 gives a little rotation. 87 begets 77. Again, doesn't get you the exact low, but pretty damn close. And then we'll come down from 77 and we will check out 67. And sure enough, you're in 67 neighborhood, and you will notice at 67, little counter rotation back up to 70 before pushing behind and then finally getting the larger rotation. So did it work? Yeah. Did it work perfectly? No. You actually had to make sure you had chart location, but it's so much better than I'm going to take it every 1 point and continue to get run over. Where's the market going? Even when I'm down here, if I'm looking for a short because I think it's going lower, right? So my low swing turns out to be at 73. So I can come over here and look at 83, and it gets me at least in the neighborhood. I've gotten my 10-point swing up, and I can start looking for things like tick divergence, structure, volume points of control, price action, all those things, and put them together. So that's really all I wanted to cover tonight. Was the reason you're getting run over, if that's what's happening to you, or the reason why you're struggling from a trading standpoint, is because the price action has changed, right? And if you were only making money, because the market was doing this every day, right? And be honest with yourself, right? Don't BS yourself. It's your money that's important. If this is the reason why you are making money, that market is gone. And from what we can tell, it's permanently gone, right? The world has changed. Things have changed in the last couple of weeks, and volatility, the cap they've had on volatility. Now, you can believe that or not believe that, but I can tell you what I can see with my own eyes. This price action right here is not repeating. We're not seeing it, right? This buy the early dip, lock and load and hold all day. And if you're trying to make that work for yourself, you are struggling in an enormous way is what's going on with your trading. That's just the facts. So anyways, that's my 2 cents. I hope that helps. So there's a couple solutions. You know what? I gave the problem. I didn't get the solution. Number one, go back and study price action prior to 2009, right? Because this is pretty much what we're having now. That's what the price action looked like. Number two, find a mentor. Doesn't have to be me. Find a mentor who's been trading from prior to the past 9 years, who knows what they're doing. Number three, read Mind Over Markets and learn volume profile and TPO profiles, okay? Very, very important, right? Don't trade alone. Find a partner, find a way, find a community that you can team up with. It's much easier sharing ideas and getting good at sharing those ideas with one another. It's worth paying to be in someone's room who's a good leader, not the guy who says, hey, dude, I started trading at 6:30 in the morning. By 9:30, I made $10,000. Not that jerk off. Someone who's really a trader, right? It should be boring. It should be structured, right? And it should not be hyped. Those should be your 3 litmus tests in there, right? And then the last piece is make sure that your personality and the time frame you're trying to trade in fits, right? And then recognize one last piece. If you can't adapt to the current environment, if you can't adapt to the up and down, don't trade. Your money's really, really valuable to you, and you should treat it like it's gold. Because look, here's the deal. If you can't make money in today's market, that's all right. The market where we're just dipping down and going straight back up, maybe it'll return. It's your job to make sure you have the capital to trade when you recognize that market, or B, learn how to trade a two-sided market, which is much more difficult. And it's not just a matter of technical prowess. It's also a matter of being able to pliable in your mind to go, okay, we were long and now we are short, and the market's just flipping around both ways on me. So anyways, I hope that helped. If you'd like some help, either I can guide you to someone who can help you, or I can help you myself. You're welcome to email me at tradertough@gmail.com. Number two, you're welcome to ask for a pass into our room for 5 days. Again, same email, and it's in the information section down there if you'd like to visit us for 5 days and see how we trade. Number three, take your time. It's not easy. The market's designed. You'll notice there's no barriers to entry, because the good traders want to take your money from you, and they want to make it as easy as possible for you to offer up your dollars and send them into their pockets. So make sure your job is to figure out how to hold on to your dollars and make sure that you're trading well. Anyways, my name is Simon. Hope you had a great night. If you like this video, please hit the like button. I hope this helped out. And use those 10-point ladders. Should be able to be a beginning of a starting point for you to find good trade location. Anyways, have a great night, guys. I'll see you in the morning.